Welcome to our channel. If you want to invest in ETFs, follow these step-by-step instructions to access diversified, low-cost investment funds that trade like stocks. Step 1. Understand what exchange-traded funds are and how they differ from mutual funds. ETFs provide instant diversification, trade throughout the day like stocks, and typically charge lower fees than actively managed funds. Step 2. Open a brokerage account with a reputable firm offering commission-free ETF trading. Many modern platforms allow you to start investing with no minimum deposit and provide educational resources for beginners. Step 3. Determine your investment goals and risk tolerance to select appropriate ETFs. Consider your time horizon, income needs, and comfort with market volatility when building your ETF portfolio. Step 4. Start with broad market index ETFs that track major stock indexes. These funds provide exposure to hundreds or thousands of companies with a single purchase, offering excellent diversification. Step 5. Compare expense ratios among similar ETFs, as even small fee differences compound significantly over time. Focus on low-cost options from reputable fund companies with large assets under management. Step 6. Build a balanced portfolio using multiple ETFs, covering domestic stocks, international stocks, and bonds. The appropriate mix depends on your age, goals, and risk tolerance. Step 7. Invest regularly through automatic contributions and rebalance annually to maintain your target asset allocation. ETFs make it easy to maintain discipline through dollar-cost averaging and portfolio management. Don't forget to like this video and subscribe to our channel.